Hi everyone, welcome to my channel where I share the latest news and analysis on the stock market. Today, we're going to talk about why Wall Street indexes dipped ahead of inflation data and what it means for your portfolio. But before we get into that, please make sure to hit the like button and subscribe to my channel for more videos like this. So, what happened today? Well, Wall Street's main indexes are edging lower shortly after the cash market opening on Wednesday. This cautious approach by investors comes as they await crucial inflation data, set to influence the U.S. Federal Reserve's interest rate decisions. The upcoming Personal Consumption Expenditures (PCE) price index, a key inflation indicator favored by the Fed, is anticipated to reveal a monthly rise in prices for January. Why is this important? Well, inflation is the general increase in the prices of goods and services over time. It affects the purchasing power of your money and the returns on your investments. The Fed has a target of 2% annual inflation, which it considers healthy for the economy. However, if inflation rises too much or too fast, it could erode the value of your money and force the Fed to raise interest rates to cool down the economy. Higher interest rates make borrowing more expensive and reduce the demand for stocks, bonds, and other assets. So, investors are nervous about the inflation data because it could signal that the Fed will tighten its monetary policy sooner than expected. The Fed has been keeping interest rates near zero and buying billions of dollars worth of bonds every month to support the economy during the pandemic. But as the economy recovers, the Fed may have to scale back its stimulus measures to prevent inflation from getting out of control. How did the market react? Well, at 14:30 GMT, the Dow is trading 38,894.02, down 78.39 or minus 0.20%. The S&P 500 index is at 5,070.44, down 7.74 or minus 0.15%, and the Nasdaq Composite is trading 15,960.58, down 74.72 or minus 0.47%. The Nasdaq, which is heavily weighted with tech stocks, is underperforming the other indexes, as tech stocks are more sensitive to interest rate changes. What else is affecting the market? Well, the stock market, which saw a vigorous rally fueled by strong earnings reports and excitement over artificial intelligence (AI) advancements, has faced hurdles in recent days. Persistent inflation concerns, evidence of a robust U.S. economy, and reluctance from Fed officials to reduce interest rates have led traders to adjust their expectations, now forecasting the first rate cut in June, pushed back from March. Today's price action highlights the nervousness surrounding inflation and the Fed's response. What about the U.S. economy? Well, recent data confirmed that the U.S. economy maintained a solid growth rate in the last quarter, driven by strong consumer spending. However, early indicators for the current year suggest a slowdown. Upcoming jobless claims and manufacturing data are also eyed for insights into the economy's health and potential interest rate moves. What about the individual sectors and stocks? Well, in early trading, losses were led by tech stocks, with significant movements in individual companies. Applied Materials faced a decline following an SEC subpoena regarding its China shipments. AI leader Nvidia saw a modest dip. Contrarily, Beyond Meat surged following its revenue beat and cost reduction plans. eBay also gained on strong quarterly results. However, Bumble and Novavax experienced declines due to disappointing forecasts and financial results, respectively. What about the cryptocurrency market? Well, cryptocurrency-related stocks like Coinbase Global, Marathon Digital, and Ride platforms saw gains as Bitcoin continued its upward trend, crossing the $60,000 mark. Bitcoin, the largest and most popular cryptocurrency, has been on a tear lately, driven by increased adoption, institutional interest, and regulatory approval. However, it also faces volatility, competition, and environmental concerns. What is the overall market outlook? Well, with a higher number of declining issues compared to advances on both the NYSE and Nasdaq, and mixed signals from various sectors, the market exhibits a cautious stance ahead of the upcoming economic data and Fed's policy direction. What is the short-term forecast? Well, given the apprehension ahead of the inflation report and mixed economic signals, the short-term outlook for the market leans towards a cautiously bearish sentiment. Investors are advised to closely monitor the upcoming inflation data and Fed officials' comments for potential market impacts. What about the technical analysis? Well, let's take a look at the daily chart of the E-mini Nasdaq 100 Index futures. As you can see, the index is drifting lower on Wednesday, capped by the all-time high at 18,144.75. At the same time, The daily chart is showing plenty of room to the downside, with the key target a potential support cluster formed by a minor bottom at 17,372.75 and the uptrending 50-day moving average at 17,354.60. The market is currently giving investors choices. They can continue to accumulate shares just below the all-time high, play for a breakout to the upside, or wait for a break into value at 17,372.75 to 17,354.60. So, what do you think? Are you bullish or bearish on the market? What are your favorite stocks or sectors right now? Let me know in the comments below, and don't forget to like and subscribe for more videos like this. Thanks for watching, and I'll see you in the next one. Bye.